there, traders. Todd here. Welcome to the Wednesday webinar. Sorry for keeping you guys on hold there a little bit. Hope you guys are doing well. Happy December. I've got a little bit of the cold and sore throat that probably most of the country has right now. But let me just check in. How's everyone doing? Let me just see if the audio is good. We had some tech issues to start, but I think we're going to get it back on track here. Let's check. Make sure everyone is good. All right, perfect. Looks like we're rolling. So again, excuse me, I'm going to try to push through here. Again, hope you guys had a good Thanksgiving. We were in Florida, down in Pompano Beach, and was supposed to fly out Sunday. We pushed it up Saturday night to not mess around with that Sunday travel. So we flew. Oh my God, we flew. My wife and I, we were trying to decide, should we take the 8:30 flight, which of course didn't take off till 9:15. So we landed at like midnight with the baby, who's 1 year old, and our twin boys are 5. So we're like, oh my God, we don't want to be that person bringing a baby on that flight. But you know, we thought it was better than getting stuck down there in Florida. So we're back, and all's well. We got some market volatility. I was down in the city yesterday for fast money and power lunch. So I want to talk about a few of the things that we're talking about there. I have some slides and some kind of ideas for you guys. You know, the discussion. Let's bring in the team here. Good morning, team. How you guys doing?
Morning, Todd.
Hey, man. Good morning.
Hey, traders. How's everybody today?
Yeah, there's the illustrious trading analysis team. They're doing a great job while I was kind of stepped away. We have some positions we'll talk about. I have some kind of thoughts. You know, some of the discussions we're having with the producers yesterday was, is this a repeat of December of 2018? And you know, I put some charts together for you guys this morning, just thinking about, you know, that idea that, you know, are we in for a serious bout of volatility? And you know, I don't think we are, for a few reasons. You know, I've got some slides here I'm going to bring up for you here, showing you that, you know, it's a much different dynamic at the end of 18 that we have here in 2019. Bennett and Terry, you guys have been kind of on the ground floor watching here while I've been away. You know, talk about the markets here a little bit. Bennett, do you want to kind of kick us off here and show us where we are from an Elliottwave point of view and kind of put the context in? Because I've been a little unplugged from the markets, relying on you guys. So would you mind kind of kicking us off?
Absolutely. I'd be happy to, Todd.
Awesome. Let me just
go ahead and get my screen share ready for you.
Presenter, and here you go. And Bennett's chart will come up here. And, you know, at the end, I want Bennett to take us through and just kind of show us from an Elliott point of view where we are. And then, you know, I've got some interesting, I think, kind of yield curve S&P comparisons I want to show you that we are in a different environment last year, which caused a pretty significant drop, really significant drop that I don't think we're seeing here. But first, let's kick it off as we normally do. Here is Bennett's screen. Take it away, sir.
All right, Todd. So as you know, we've been tracking a couple of different interpretations here with the S&P as well as the NASDAQ. This is the count that we've been tracking for, gosh, the better part of a year now, this being the contracting variety fourth wave triangle. Coming out of the B wave triangle completion, we had a nice mode of impulsive advance thus far. And we can look at this in a couple of different ways. As of now, I still feel that we are contained within some sort of a fourth wave correction. We're getting some feedback there. Somebody's...
Hey, Alex, can you mute yourself?
Yeah, let me see if I can do it, Alex.
All right.
Now, Bennett.
Yeah, no worries. So
did the feedback go away too?
Yes, it did.
Oh,
so
okay.
I think it was just a looping issue, even with his headphones there. So nice B wave triangle completion. This is where we put the position to work in the NASDAQ. Took advantage of this move, and you know, if we get off the daily, taking you down to the 195. We can count a pretty clear 5-wave move within orange 3 of green 3. We got just shy of the 2618 of 3v1, and we had wave 5 completion just shy of that Elliott wave trend channel offer from the orange minute degree here. Thus far, the move off the highs is a 3-wave move, in my opinion. Taking you down to the 1 hour even, you can see we had a nice little 5-wave move in A, 3-wave move back in B, and a just beyond equality of C and A. And we're seeing a pretty decent response here this morning in the futures market. This same count is applicable in the NASDAQ. And another very interesting piece here, if I can get my MotiveWave to respond here. So this is a trend line that's really been acting as resistance going back to January of 2018, September of 2018. We had another test in July of this year. We're finally breaking that. And if I get you back down to the daily, you can see we pulled right back to this trend line yesterday, and we're starting to see some support come into play. We have our zone of fib support here offered in wave 4 between, what is this here? 3051 and 3082. Yesterday's low was right at 3070, I believe. So we are seeing a response off of that. And, you know, following a break of such a longer term kind of trend line, a period of consolidation in the form of an Elliott wave triangle is actually makes quite a lot of sense in this particular instance. The same thing can be counted in the NASDAQ. We have a beautiful post-triangle divergence and likely setting into some sort of a 4th wave consolidation. Taking you back to the S&P, go ahead.
Bob, pop that NASDAQ chart back up. And, you know, Bennett opened with, guys, that, you know, we are possibly rallying in a B wave that finds resistance, but also trading analysis introduced this count right here that Bennett's showing that wave 4 completed with a triangle in the Y wave, which allows for significant upside. I just want to kind of make that distinction that, you know, I'm starting to shift. I mean, I think it's too early to know at this point which count is going to be accurate. The first one they showed that's showing this is a B wave rally that might have resistance 32, 3300. Maybe we've seen the high, or this one, which allows for another 20% upside. I'm kind of leaning towards this one, but I'm certainly willing to have that discussion with anyone, and I'm completely open-minded. What are you guys leaning towards?
I was actually just getting to that. I think
I'll stop it.
No, you're good. The count actually makes a lot of sense. This count is also applicable to the S&P. So although we are tracking the contracting variety triangle variant here, we can actually count the exact same correction coming to completion in the form of a Y wave triangle. So this would square up to the same flat that we're squaring it up to within our contracting variety triangle. This would just offer earlier completion, and implications obviously would be to the upside. So back to his point, we are tracking both interpretations from kind of an investment standpoint and determining which of the higher degree trends are in play. Following this 5-wave move, any 3-wave correction will be very closely watched, as I'm sure you can imagine.
Yeah.
Back to your point of, you know, is this going to be a repeat of December of last year? Let me go ahead and bring in this alternate I was working just to kind of demonstrate the fact that, you know, we could squeak out a completed 5-wave move, but the fib levels here, there's just not as much evidence here to support, in my opinion, this being the completion of the 5-wave move. We don't have a pulse of activity off the top.
Go ahead.
Go ahead, Terry.
I'm sorry. I was going to say the thing that, before you jump in there, the thing that catches my eye on not liking this is the distance of traveled in green wave 4 compared to green wave 2.
I was going to say the exact same.
It's too short. It's the same direction, and the guideline of alternation would give you the higher probability that if wave 2 is directional, wave 4 is going to be sideways. So, you know, to have 2 wave 4s both direct, or wave 2 and wave 4 directional, and having wave 4 shorter than wave 2 in time and price, you know, none of that just matches the right look for me. So, you know, that's
couldn't agree more.
And what we're doing, viewers, is Alex or Terry and I immediately jumped on Bennett and say, no, wave 4 doesn't look right. But what Bennett is doing is he's just trying to look at multiple possibilities and say, could this be a wave 5 top? It might be. It's not probable because of everything Terry just said, but it could be. I can't tell you if this is the end of the rally, but we're accounting for multiple scenarios as to not be surprised. And if this starts to manifest, we'll need to adjust our positions, scale back some risk, and we're not going to be caught off guard. So good, very good work.
Exactly. It doesn't break the rules necessarily but it bends them so much to give you less of a conviction on this particular wave count than you have on the other wave counts. So when you look at Bennett's red count or his other alternate counts, you don't see as many things to point out that, well, this doesn't look right or that doesn't look right. There's just fewer of that. So when we can develop multiple wave counts that are all valid, we start looking for those subtleties that make the distinction and push ourselves in one direction based on that.
And
so,
I couldn't agree more, which is kind of why it was a hidden alternate count there. And more importantly, just kind of bringing that count into the picture was Elliottwave having alternates is all about having context in the event that plan A obviously doesn't work out. So and I completely agree. The fib relationships, the guideline of alternation, there are several reasons to support the idea that we're actually going to be here in a sideways consolidation for some time.
Okay.
I'm going to stick with your triangle, Todd. Still, I mean on a daily. Yeah.
Okay.
I still think that the triangle is appropriate wave count, and that we're gonna. I mean,
from a FX point of view, Alex, are you starting to see any kind of risk aversion indications from FX?
Exactly.
You are? Okay.
Exactly.
All right, let's carve out some time. I want you to take us through what that's going to be. So let's not jump into that yet. Bennett, is there anything else you wanted to cover top level on the indexes?
I think that's pretty good. I think we've covered, kind of covered our bases here. Again, this period of consolidation over this trend line makes a whole lot of sense. The alternate really just, in my opinion, isn't as high up there on the list. So both the S&P and the Nasdaq, we can count a nice wave 3 completion, setting us up for this fourth wave consolidation.
Got it. Good work. All right, so let's continue that discussion, guys. And by the way, how was the show 2 weeks ago? Last week we didn't have a show. 2 weeks ago with Andrew Baptiste. Wasn't that special? Hopefully he's listening. Hopefully he's here. Didn't you guys enjoy that show? If you haven't, be sure to go back and look at the past. Andrew is he's been he's a mentor first. He's become a really good friend of ours, and he's very supportive of what we're doing. And he's created a lot of careers in the professional analyst world, and he's been the I don't know, probably the most recognizable Elliottwave analyst on the investment bank side, who doesn't go out there and look for a lot of fame and recognition. So he kind of flies under the radar. But anybody's working.
Drew's here. Drew's here, Todd.
Is he?
Yeah.
Drew,
it was a pleasure to have him on. That was so much fun.
You're the man.
Alex
I wish we could
is
have you on every show. Go check him out at tag618.com if you're looking for institutional quality research. We love Drew. And his baby girl's getting married very soon here, so congrats. Okay, so let's, I just want to take you through comparisons last year to this year. So here's the first chart that I wanted to take you guys through. This is, let's see if we can go zoom in here, touch. It's just a different market. What I did is I took a green box here. This is the beginning of October of last year into the very end of 18. So basically what I did is I just Control-C, Control-V, copy-pasted that box, put it over the current beginning of the October 2019 market, and just to compare sort of apples to apples. And you can see right off the bat, right, we had a decline in October back to the 200-day moving average. And then November just consolidated in some kind of, looks like flat correction or something. And then we continued lower in December. So December was nothing more than a drop below the 200-day, consolidation through November, and then we dropped into December, rallied back. And, and from an investment point of view, I think it's misleading, again, for people to say, market's up 20-something% this year. Not really, because you really have to take into account the decline that we've seen in October of 18. So you got to look at peak to current price, I think. But again, look at what we have here in October. We've got a ripping market here in October, in November. The one concern that I have for this is the distance from here to the 200-day moving average, which does look similar to this. It's an extended move for sure. But to say, are we going to have a December swoon because, or similar to what we had last year. Right now, it's a totally different market. And I think, one thing that is important is the interest rate environment. Same kind of study looking at last year. We have U.S. 10s minus 3s, 10-year minus 3-month. We have a flattening and almost an inversion of the yield curve here in 2018 in green, which is driving the S&P lower, right? You've got long end bonds being bid up, dropping those rates, which is flattening that yield curve. So, normally it's going to be shaped like this behind me, and the yield curve is doing that, right? That's flattening to inversion, and that starts to signal economic weakness, and that's what you're seeing in the S&P. Right now, this is a totally different yield curve. We've got a re-steepening of the yield curve, which is signifying a healthy economy. So am I saying, am I bullish? Yes, I continue to be bullish. So yes, we have a little bit of a drop in the yield curve here, but the shape of this is much different than the shape of this. So, for those reasons, I just don't see it. And then, Terry, we didn't really do a pre-show production here. Are you possibly prepared? Do you want to do a little sector analysis?
Yeah, I've got it ready. But
Okay.
before we move on, I do want to point one thing out: is the Fed's the Fed changed their stance too around September, right? Didn't they? They started injecting money, and they don't call it QE4, but it's but there is a reversal where we were buying back, I guess, those
the repo.
The repo reversed. So wondering if you thought about, if anybody's talking about that too, and if the Fed backs off on that or starts to back off again, what implications that might have. But certainly it's
stealth QE, not stealth, but the unspoken QE.
I think it's all about the Fed right now. The trade talks are short term bounces in the market. They're flamboyant and something to do. And the Fed cut the interest rates last year. It was the Fed jacking the rates up when we really didn't believe they needed to, and that just put the brakes on the economy. So now the Fed has backed off, and the Fed has pulled the rates back to closer than global normals, although I think the U.S. is still higher than everyone else.
Absolutely.
And Alex can cover all that in his story.
Yep.
But accommodative Fed, that's good for the market.
Absolutely.
Political gridlock is good for the market. So all of I don't know, those were some of the talking points you might have had yesterday with the team there. So.
Yep. Well said. All right. So with that being said, we still have our positions, our longer term portfolios, the option positions that we're carrying with our members at Trading Analysis. Right here we have. Let's see. Let's talk about the SPX. It's very flat. We have an SPX butterfly going on, which was actually established prior to this this correction that we've seen. We're not really going anywhere on it. Here's my actual position. I've got a 3060, 3100, 3135 call butterfly. So we've got 40 points below, 35 points above. And what you do is if you drop the upper call lower, you're bringing in more positive delta to kind of give it a broken wing appearance. That's why I have more risk on the downside than I do on the upside. It was a bullish trade. Right now, SPX, we're trading 3090. So we're okay. We're flat on the position. If you look at the purple number, that's the P&L that I probably should see today at $30. My max loss is 2,600 on the downside, 1,100 on the upside. Possible pin gives us 9-10 grand of profit. So if we could just kind of stay here through the expiration, which is 20 December, in line with Bennett's triangle, which is sideways, we might be in pretty good shape. So if you don't have the trade on, we'll throw that one to you. I think it's still valid, And then Bennett, let me just look at Bennett's work here in the S&P. Do we have an expected duration of that wave 4? We have a 4v2 kind of time comparison. To Terry's point, it was a little shallow in terms of time.
I think we had to do a 4v3 because wave 2 was so shallow, and so we were looking at maybe a 618 on the 4v3 as a cleaner indicator.
Okay, perfect. So 38% time retracement of wave 3 would be 38% would be December 22nd, 26th. 23% would be December 16th. So, you know, we're right there in expiration. So if we could just kind of hang out, I think we actually might be pretty good on that trade. We have another one on in TLT. We have a 137, 140, 142 call fly. Again, we've got $3 below the body, $2 above to give us sort of that, again, more of a bullish broken wing approach. I got 720 of max risk. On the downside, I've got, you know, if we explode higher, 280 to make on the upside. If we could get a pin, $2,200 around there. So we're also in really good shape heading into 20 Ds for this guy as well. Right now, we're up $550 on the trade or whatever. If we can continue to eat up that theta will accelerate here as we get closer to expiration. That purple line will start, the T line will start to move up into the expiration line, and hopefully we're good. The TLT position, let me just pull that chart back and show you what we're doing there here, guys. As you can tell, I'm kind of getting set back in after vacation. Got sort of medicine head, so I'm going to shut up here real soon to rely on the team. But we are kind of messing around in this wave forward, and it looks like, Bennett, is this the primary account you guys are tracking on TLT? Are you guys starting to get bullish on bonds?
Terry's actually been doing some really good work there on the TLT, covering that.
Okay, yeah. So Terry, you like this higher then, huh? So we got to be a little careful then if you.
That little green zone there represents our position out to the December 20 expiration, and as you can see, you know, we were questioning early whether we needed to get out of it, and Bennett and I convinced you to stay into it, and we got a pullback. Yesterday's sharp jump up. You know, if you zoom in a little bit smaller time frame and look in a little closer there. What we need to, if this is a wave 2, we need to see a 3-wave correction, and so we're down in A. You got to readjust that B wave up, and then we're going to push lower in C. So I think we've got some more time for expiration for us to sit right in the middle of this fly and collect more premium, and then we'll have to. Looks like we'll probably have to get out of it before expiration. If it pushes too low.
Man, if this is by chance wave 2,
or it comes right back in pins.
If this is by chance wave 2, we really need to pay attention to that. You know, if we're going to be in that kind of situation. But interesting. Okay. So we have trend line resistance. Hopefully it's a B wave, and we just settle around 140. We're going to be good. So the other thing is, I was trying to insert in fast money last night. I was trying to insert the sector rotation. I threw it on them a little last minute. I think there's a really key kind of takeaway here. That's, you know, I think there's 2 things that we've done here to kind of show you guys and confirm our bullish case. Which number 1 is the Elliottwave count. Number 2 from the interest rate environment, and number 3, you know, the Fed's behind it, as Terry mentioned. So I guess that's number 3, and then 4th is sector rotation. We're seeing on the weekly sector rotation by relative rotation graphs, you're seeing XLK continue to be the leader. It's shaped where we want it. It's pointed where we want it to point. It's in the quadrant we want it to be in. So technology continues to outperform. And this is one of the charts that I sent to the producers last night, showing that the NASDAQ just continues to outperform. Okay. So we have NDX SPX ratio should be just above our heads here. This is the NDX. So same situation, you know, just using traditional technicals. Where was resistance that was broken? Right about 8,000, 80.30. Any kind of check back is fine. You know, we're just breaking above the 2019 consolidation, coming back to check. You look at the NDX SPX ratio, the rally that we've seen into the end of the year is tech driven. You can see the NASDAQ outperforming the S&P here. And if we flip over to Terry and go to the sector rotation, you'll see that XLK is in a strong position. And then the other one, Melissa asked me a follow-up question about what other sector might be sort of a hedge or maybe a cleaner way, a less volatile way. And it, you know, it could be XLF. The financials are acting extremely well here. XLF is in a good position. And then healthcare has really come on. So you've got XLV, XLF, and XLK sectors that I think, and let's go to Terry, the rotation man here, and see if that is in fact the case.
Yeah, we had Julius de Kempener, the creator of this relative rotation graph, on a couple of weeks ago. If you guys missed that, go back and rewatch that. Great deal. This is a new tool we've brought to our clients here. What we're plotting on the x-axis is the relative strength of the sector versus the S&P, and the momentum is the y-axis. And so that gives us this 4-quadrant grid. And within this grid, we can look at 100% means that the relative strength of the underlying instrument is exactly the same as the benchmark. And so what Todd is saying is we've got the XLK sitting out here at 102, financials at about 101, and here comes healthcare. I'll zoom in a little bit, but you can see that in that green line, the heading, the direction of the heading is almost a 45-degree heading here, heading straight up from improving, and the next area of where this is going to land is the leading quadrant. This is on a weekly analysis, so we're trying to look a little bit longer term here. If we look at the same analysis in terms of a daily, so much more short term, you can see that healthcare clearly pushed all the way up. It's got a little bit of consolidation going on right now, and so is tech sector. Semiconductor specifically inside the tech sector were really the big pushing us into that, and they're taking a little bit of a pause right now. But I really think if you look at the rotation here, if we just go back, this is back to the beginning of November, right about here, and you kind of follow these arrows as they rotate clockwise, and if you look inside there, you can see tech floating around, zooming down. It is moving pretty fast down, but I've got an inkling of an idea as it starts to bend over that you're going to see a rapid reversal and it'll come right back up. That's what we're looking into.
Terry,
in the short term, you've got your
Let me just say, the more we're using this, the less I'm using the daily. I thought it's too volatile for our time frame. Are you in agreement with that?
If we're looking at using this for the long-term portfolio, I agree with you. The weekly is what we need to look at. If we want to look at doing any kind of short-term options trades, probably this daily is going to help us give us a good idea for entry into it. I think the weekly is where we're going to use it for screening our future plays.
Gotcha. Okay.
So yes, the daily is, and if you get real-time data with this tool, this Optima tool, you can even take it down into intraday times. And right now, we don't believe we need to get that tight because we're not day traders, but you could do that with this tool. I do want to point out, in this short term, we're seeing the defensive sectors, real estate, utilities. Look how rapidly they pushed out of the lagging quadrant, but they kind of bent over. They are pointing to the right. They're not leading yet. The only thing that's leading in the short term is healthcare and maybe a little bit of communications. And I saw your episode on Netflix last night. You weren't real keen on Netflix, but believe it or not, it's probably one of the stronger ones. Yeah, it's not in terms of relative strength. This is the communications sector. Let me grab the corner of that. It is improving. It's improving dramatically, but as you can see, because it's to the left of the pole here, right? It's to the left of the pole. That means the relative strength compared to the S&P is lower. However, look at its momentum. It's above the equator. So anything above the equator means it's got dramatically higher momentum pushing it up, and so it could be rotating back in. This is the weekly term look at Netflix. If we look at it on the daily, and let me rescale this, man, look at Twitter on the daily here, right? But nearly horizontal on momentum, but rapidly gaining ground in terms of relative strength. So here's Netflix in the green. So Netflix had pushed itself up into this leading, but it's rapidly reversing here. And I think that's your point on your charts that you showed at CNBC last night. It kind of this kind of adds to that story that in the near term we're going to see Netflix reverse lower. But I think we gotta be careful in this near term focus that once that clears, we're gonna come back to this weekly, and this weekly performance should continue to push further to the right. So let me just echo what Terry's saying here. This is the chart that I used for the show last night. This is XLC over Netflix. So Netflix, if you count the two Googles, I think it's the
fifth largest holding within the new communications ETF. And you can see there is a pretty good divergence here as Netflix is dropping, XLC is continuing higher, and XLC, I think, is even lagging the overall NASDAQ. So you got the Netflix, which is lagging communications, which is lagging the NASDAQ. But to Terry's point, you're actually starting to see a little bit of an upturn there in the Netflix XLC ratio. So Netflix is gaining a little bit of ground here, and Terry is showing the same thing on the rotation graph. So just wanted to throw that out there. I don't love the wave count. I'm not going to trade it, but it's starting to show a little bit. I guess it's starting to show some improvement.
Yeah, we're not advocating jumping into it right now, but we're certainly looking. This is on our radar, so we're not dumping it from our radar list. So
Yep.
What else would you like to look at? Here's the semiconductors.
Let's do it quick, and then I want to bring Alex in. I want to look at from the FX point of view, and I know he has
absolutely. We got to do that.
Some crypto. And by the go ahead.
But in the semiconductors, everything in this is the daily, in the short term. So in the daily short term, there's nothing in our semiconductor index that's sitting in the leading quadrant anymore. Everything is reversed lower, and so this is putting the big pull down on the XLK. Okay, but if we go back to the weekly, here. Look, semiconductors. I mean, like more than 75% of the semiconductor index is sitting over here in the leading quadrant. You do have a collection down here, but even in this collection down here in the lagging quadrant, look at the direction. The direction is vertical. Yep. The direction is headed north. There's a couple of them going sideways and reversing, but even Texas Instruments pushing lower. It's going to lag these others, but these other guys are. I like the fact that their momentum is increasing while their relative strength is kind of holding flat. And so semiconductors don't count it out yet, but in the short term, it is pushing us down, and that's holding back the XLK. Absent that, maybe this correction won't be too long.
Yep. Well put. All right, so let's bring in Alex. Alex, give us a mic check and let us know we're ready to roll. What's going on in Serbia, man? How are you?
Oh, I'm fine. In Serbia, usually before the New Year, people get a little bit, fuzzy. So every New Year is the same. Fuzzy? Like, I mean, they hurry all around like it's the end of the world.
Oh, we do that here too.
I don't think that's.
Yeah, I mean that's. I mean the traffic is just. I mean. I'm not going to complain. I'm fine. Everything is great. Okay.
Right.
So
at the end of this, I'm going to leave you guys with a nice holiday song that I love from the Dropkick Murphys. When Alex finishes, I'm going to send you guys my favorite holiday song. So please, all right, Alex, tell us what's going on in the FX world.
First, one thing I really enjoyed the video you made in Florida with the rose. It's so nice. And secondly, how this book is going? Is it an interesting one?
Oh, it's very good. The Nick Murray book?
Yeah.
Yeah, it's really good. It's good. It came on a recommendation. It's over on my desk. It came on a recommendation from Josh Brown, the Reform Broker, and just talk about, it's more about the psychology of what we're doing and desperately trying to help people. And we're not so much financial analysts as we are psychologists, and trying to help people get out of their own way in order to kind of fulfill and succeed at the highest level to their potential in terms of their finances. So it's just a really good book in terms of kind of resetting the mindset of what we're trying to do in the short-term business or longer-term portfolio management. It's really good. So anyway.
Few guys also told me about it, so I was stunned by the coincidence. Okay, so let's dive in. This is the euro-dollar chart. As you know, I'm tracking actively this 200 moving average, which was with the kind of Elliottwave wave count containing the upper range to go a bit more upside. So we are still there. I'm still looking for another push lower. And by the way, I have the wave count, which I'm tracking on the US rates, on the 10-year yields. And I think the yields are still going lower.
Oh, wow. Wow.
I'm not so optimistic on the yields. As you can see, there is a wave 1, 2, and there is a 5 wave down, and this looks very corrective. So
that would match up with the TLT, with Terry's TLT pointed straight higher. So we have to watch out for that.
Yeah, so I think yields are still going lower for another push. The same thing are in Europe. We have Fed on 11th. Market consensus is that we're going to stay the same, so unchanged. And Lagarde, the first ECB meeting is on the 12th of December, which will be an important one. That's because like she didn't still
next week.
Unveil what will be the future of ECB. So two very key, I think, important things. I'm going to show you the risk that I'm following, and you know we track FXY and dollar yen actively. So we didn't quite reach our levels here. So I'm looking for either to put this wave 2 here, or I'm going to, of course, track this with S&P. But I think this doesn't look very impulsively for now, and I'm ready with the S&P count to short it.
Okay.
On account of this. So I think we are in a big triangle. Yields are going to move lower. So if the S&P starts to move lower, as I think it's going to will on the triangle basis, which I'm tracking very actively, or wave count for last year and a half, I think we're going to go down in wave 3, 4, and 5. Okay. So I still see the possibility we roll over for here in a risk-off event, and we do another 3, 4, and 5 down. Also, if I look in some emerging currency against the yen,
let me just bottom line. Let me bottom line that for you stock traders. Sure. FX has been quiet for 2 or 3 years now, and Drew will be the first one to tell you that. But when FX moves, really it has a big implication. Has from a macro point of view, from an intermarket point of view, when FX moves, it's going to impact fixed income, commodities, and equities. And if and when, I'm sure that this triangle is going to break, it's going to have an impact on global equities. The yen and the dollar really are a good kind of barometer of risk on, meaning if dollar yen were to push higher, generally you would see stocks around the globe move up. And if dollar yen were to push lower, if traders and investors are moving into the safety and liquidity of the yen, that's a risk-off signal, and you'd expect to see stocks decline. If you're trading FXY, this chart higher equals FXY, the ETF that traps the yen, lower. If this chart goes higher, FXY lower. If this chart goes lower, FXY goes up. Okay, so
exactly.
Definitely watch this. When this consolidation breaks, it's going to impact equity.
Also, Aussie yen doesn't show any particular bullish signs here, so I'm still watching a possible break of this corrective channel and move to the downside below your famous 70 levels, which was not break on the first attempt.
Amazing.
But I think this
is like a 5 or 7 year level in Aussie yen, right, Alex?
Yeah.
Yeah.
I think it's like a 7-year, 8-year level. So I think it's going to break on a second one.
Wow, you're pretty bearish. That's interesting.
Yeah. I am pretty bearish, and if you look some emerging market currencies against the Japanese yen, this is the Turkish lira against the Japanese yen, and look, it's a very clear wave 1 up in 2, down in 3, triangle in 4. So I'm also preparing either for a global risk-off event, or definitely some risk-off in Turkish lira. But I think also the flow from emerging market to yen, it's going to mean it's something going to be locally on a Turkish state level, or it's going to be a world risk-off event which will move all of the others into yen as well. So from several sides, I think also Euro-Swiss doesn't look good.
Okay.
If you look Euro-Swiss, you need to pay for a Swiss now to hold, but I'm still looking down to this 106 level. So I will not be discounting that the triangle is the right wave count still.
Got it. Okay, that's very, very good point. Now, flip over to...
one more thing, sorry.
Go ahead.
Very important thing. Look at this. Yeah, we are holding for now a very important level in Chinese yuan. So 5 waves up, ABC down, or complex, whatever. It doesn't make any difference. So 5 waves up in one, down in two, clean 5 waves up. So this is 100 level equality, but we are starting to hold a possible wave 2 in a higher degree, wave 3, 4, and 5 to 1618. If this starts to push upside, that will be really devastating for a risk.
Kind of ruining our morning here. I was like, yeah, support's fine. Buy stock. I guess not, man.
It's raining on our parade.
I mean,
raining our parade there, Alex.
It's still online.
But he's using weekly charts.
Yeah, okay, but
he's
still,
looking a little bit further out than we were. We're looking a little bit shorter term.
These are not. Oh, God, I was just up 1618 on the day. I was just up 1618.
What an eye!
I wish I gapped.
You just quoted.
Okay. So, okay. So let's. All right. So good work there. Tell us about crypto. We're getting some movement here.
Yeah, nothing much. Our 618 worked perfectly, but it's supposed to, on the end, it finished as an X-way. We were long from some around here. We were stopped out for a relatively small loss. And then I'm still thinking we are in a B wave up and we're going to have another push down. It's still very well contained in this corrected channel. Okay, so look how well defined this is. I'm counting this as a 5 waves down. I'm looking for a B wave up. As an intermediary wave. We were long from here, actually, nice inverse head and shoulder. And then we went out. Some of the members went out here. I closed it yesterday with a small profit because I was also had the wave count that this is the wave Z and we are over. But I don't like this wave count. I talked with Terry yesterday. A triangle B and a big C doesn't work for me. So I'm gonna stick with the regular ABC in a final Z wave. So this will be either our new short entries or our new long entries.
PhD level Elliottwave analysis.
Yeah.
Sorry.
I mean, it's just if you look, what is interesting as well. One more chart. This is the XRP or Ripple. So a very nice triangle here. I'm looking for a 0.15, one more push down, and we're going to buy this one as well here for a move upside. So some of the wave counts are really aligning for one more push lower. Ethereum is also in a kind of a fourth wave pullback here as well. So I think we're going to see another push lower before we finally jump out around 15th of January, something like that.
Got it.
That's my timing, yeah.
Perfect. Great show, guys. Good stuff. Good work out of all you guys. We are Trading Analysis. As you can tell, we got a solid team. We've got every aspect of the markets covered for you. We trade live capital. We trade at the hard right edge of the chart, as an old technician, Alan Farley, used to say. So check us out at tradinganalysis.com. I told you I would leave you with a little bit of holiday humor, and I just laugh because there's one part of this. If you don't know the Dropkick Murphys, kind of a hardcore band. There's one part he's talking about these two little bratty kids wrecking the holidays, and I'm like, boy, it's starting to look like Jake and Brody, my kids. And I mean, I love them more than anything, but they're in here somewhere. I'll throw the link in there for you. Hopefully, you get a laugh out of that one. So.
I have one favorite one as well. You know, there is a two blonde girls.
What?
You know the holiday song with the two blonde girls?
No.
I'm gonna send you.
Should I?
Yeah, no, it's fine. I'm gonna send you.
Okay. Oh boy. Anyways, I think we're gonna get off track. So I dropped the link down there. So hopefully you guys are getting ready for a nice holiday season. We have a lot to keep in mind. You know, I think from the stock market point of view, I was bullish, and I'm certainly listening to what Alex is saying. There is a lot of risk-off indication in the FX.
Just a caution.
No, you know, it's duly noted. So check us out. And Alex just did a great webinar. Was it last week or 2 weeks ago on the crypto? We had a lot of annuals join us. So really well done with that webinar, guys. And let's see what else is going on. Any other announcements, or are we pretty quiet into the end of the year here, boys?
I think that about covers it.
Okay, perfect. Guys, if you don't mind, throw a thumbs up on that YouTube video or in the window there. Let Google know that you're watching, and share the link if you don't mind, and tell your friends about it. And guys, we'll see you next Wednesday. Guest to be determined. We're kind of falling into like 1 week no guest, next week guest. So we'll have somebody join us next week. Hit us at tradinganalysis.com. Thanks for listening. Hopefully it was helpful, and we'll see you guys next week. Members, we'll see you in 20 minutes for the member webinar. See you guys.
See you guys. Have a nice week.
Take care, YouTube. See you next week.